Hi everyone. In this video, we are going to see about functions of commercial bank. I am Dr.M.Radhika, Assistant Professor of Economics, Sri Sharda College for Women, Salem. Functions of commercial bank can be classified into primary functions, subsidiary services, and other functions. Primary functions are the two functions which a bank performed from the days of its origin, that is, acceptance of deposits and advancing loans. Whereas subsidiary services include agency services and general utility services. Other functions include facilitating foreign trade. Let us see the functions of commercial bank one by one. That is primary function. In primary function, we are having acceptance of deposits. The banking operation depends upon the deposits they are able to mobilize from the public. Deposits with the bank are preferred by the public because it not only offers safety to their cash balance, but it yields rate of interest for it. These deposits are of three kinds, that is fixed deposit, current account, and savings bank account. Fixed deposit. Fixed deposit refer to the amount deposited for a fixed period. It is generally 1 year or more, but nowadays banks accept fixed deposits even for 90 days. The deposits are repayable only after the fixed period. Hence, it is also known as time liabilities or term deposits. The rate of interest given for fixed deposits is higher when compared to all other deposits. The longer the period of deposit, the higher is the rate of interest. Fixed deposits are not supposed to be withdrawn earlier, whereas bank permits in case of some emergencies by deducting a certain amount of interest paid for it. Fixed deposit holders can obtain loan from banks against the security of fixed deposit receipt. Fixed deposit receipts are issued at the time of opening the account, and it has to be given at the time when the deposit is to be claimed after maturity. The next one is current deposit, or we can call it as current account. This account is maintained by businessmen. Current account deposits allow money to be repayable on demand. Normally, banks do not grant any interest since the amount may be withdrawn any number of times during a single day. They have to maintain minimum balance in it. To withdraw the amount, checks can be issued. Banks owes a debt to repay the amount on demand either to the depositor or to anyone in whose name the check is issued. These deposits are known as demand deposits or checking deposits. The next one is savings bank account at savings deposits. This account is opened with a small initial sum of money by individuals. There are some conditions on the operation of this deposit account, restrictions can be placed on the maximum amount that can be withdrawn at a time or the number of times the amount can be withdrawn have restricted. Money can be withdrawn with a check or withdrawal slip. Interest is given on the basis of monthly balances, whereas the rate of interest is low when compared to all other accounts. Current deposits and a large portion of saving deposits are known as demand liabilities, whereas we are having in India, there is also recurring deposit schemes where a fixed amount is deposited at periodic intervals with compound rate of interest. The accumulated amount is given only at the end of fixed period. It has proved attractive to small savers and fixed income groups. The next one in primary function is advancing loans, in that we are having ordinary loans, overdraft, cash credit, discounting bills of exchange. Just as mobilization of deposits gives resource for banking operation, advancement of loans gives monetary gain to the bank through interest charged on the loans. Commercial banks are known to provide mostly short term loans. Loans may be given in the following forms. That is, first one is ordinary loans. Direct loans are given to individuals or firms against some collateral security like gold, silver, or other movable and immovable assets like land, building, bonds, life insurance policies, etc. Loan amount is credited to the account of the borrower. Higher interest is charged on such loans. Very rarely, people are given clean loans. The next one is overdraft. Overdraft facility refers to the facility given to the customer to draw over and above the balance in his account. The interest is paid only the amount withdrawn or overdrawn by them. Such facility is given to reliable customers and credit-worthy businessmen. Next, we can see about cash credit. This is granted usually to businessmen against the hypothecation of securities. Usually, the loan amount depends upon the value of hypothecated goods in the warehouse. The bank opens an account in the name of the borrower itself. He cannot withdraw the entire amount in a single way. He can withdraw only up to the limited sanction from time to time. This type of loan is popular in Indian business world as interest is charged only on the amount withdrawn. The next one is discounting bills of exchange. Any person holding a bill of exchange can get it discounted by the commercial bank. That is, bank deducts a commission and pays the present price of the bill to the holder. The bank gets the full payment by presenting it to the other party at the time of maturity, and thus it makes a profit. The holder of the bill gets money before the date of maturity, say 3 months, to help him transact his business. The bank also gets a liquid asset over which it makes a profit equal to the rate of discount. So this goes about advancing loans. Next, we can move on to the subsidiary services of commercial banks. In subsidiary services provided by commercial banks include variety of functions which can be classified into agency services and general utility services. Agency services includes transfer of funds, collection of checks, bills, payment of premium, taxes, purchase and sale of securities, acting as trustee. Agency services refers to a number of functions performed by the bank on behalf of its customer. The bank charges a commission for such services. First, we can see transfer of funds. Customers get the facility to transfer funds from one place to another by means of a bank draft or check. In fact, banks have provided a cheap medium of exchange check which are more convenient than cash in the settlement of financial obligations, especially large amounts. Next one is collection of checks, bills. Banks take responsibility to collect checks, bills of exchange, promissory notes on behalf of their customers. Banks also collect dividends on shares and interest on debentures on specific instructions from the customers, and it is credited to their bank accounts. Third one is payment of premium taxes. If customers instruct the banks undertake payment of insurance premium or other bills. So also the bank may help the customer in the payment of taxes. Next one is purchase and sale securities. Banks buy and sell shares and other securities on behalf of the customers, besides providing information on such matters. Last one in case of agency services is acting as trustees. The banks can be given the power of attorney to act on behalf of a customer in the matter of collection of checks. The bank also act as an agent for its customers to obtain passports, travel check, etc. That's all from agency services. The next one is general utility services. Banks have undertaken more and more general utility services beneficial to the customers. It includes safe custody of valuables, providing information, collection of statistics, underwriting of shares, issue of travelers' checks, accepting bills of exchange, and merchant banking services. We can see it one by one. Safe custody of valuables. Locker facility is provided by bank for the customers to keep their valuables like jewels, documents, etc. For this, an annual rental charges has to be paid to bank by the customers. In case of providing informations, no person knows better about the credit worthiness of the customer than a bank. Hence, bank act as referees on behalf of their customers. Third one is collection of statistics. Banks collect a lot of information about trade, commerce, banking, etc. And it often made available to the customers on request on periodically published bulletins. This helped the customers in making business policies. Bank also provide useful advice to customers on financial matters. Next one is underwriting of shares. Indian banks have been the underwriters of major issue of shares and bonds floated by firms. In fact, the name of the underwriter bank lends credibility to the issue. A commission is charged for underwriting facilities done by banks. The next one is issue of traveler's check. Bank issues traveler's check to its customers. For this, customers have to pay the amount and gets traveler's check of equivalent value. They can be used as a mode of payment instead of cash by the customers. This facilities helps the customers from carrying large amount of cash during travel. Accepting bills of exchange. Banks accept bills of exchange on behalf of their customers. The credit worthiness of the bank, which acts as the acceptor, provides financial credibility to the instruments in the money market. The last one is in case of general utility services is merchant banking services. Merchant banking refers to the promotional assistance provided by bank to new companies. They help in the planning and execution of projects by preparing feasibility reports. They help to get government sanction, perform routine correspondent to get financial assistance from specialized agencies and arrange for technical consultancy. So, with this help, merchants can benefit out of it. Some big banks have separate merchant banking divisions. Next one is other functions. In other functions, we have facilitating foreign trade. Modern commercial banks have evolved more and more new functions in their attempt to diversify their functions. One among that is banks deal in foreign exchange in India. Originally, this was done by foreign exchange banks, but now most of nationalized commercial banks have been permitted to buy and sell foreign exchange. They help in conduct of foreign trade by discounting exchange bills in foreign transaction. So these are the functions of commercial banks. To conclude, from being mere dealers in money, banks have emerged as a vital link in modern commerce. Their major function is no doubt creation of credit. Banking functions in developing countries have been oriented towards the goal of economic development and welfare. Thus, commercial banks in India have been expected to provide credit to the priority sectors. Modern commercial banks play an important role as financial intermediaries to promote trade and commerce with a social and welfare orientation. So these are the references I have used for this video. That's all from the session. Thank you one and all for listening.